Dear aspirants, welcome to our channel, Trusted Brains IAS Strategist. Today, we are going to discuss current affairs related to economy, and the topic is Global Pact on Minimum Corporate Tax. Now, what is this Global Pact on Minimum Corporate Tax? Now, this pact deals with the imposition of minimum 15% tax on corporates or businesses operating from different countries, and the intention behind this act is to control the trade disputes between countries, because the countries, the major powers, are attracting the investments, foreign investments in their countries by imposing very low tax or no taxes at all. Now, about the pact, 136 countries have reached to an understanding at the inclusive framework meet under the OECD, Organization for Economic Cooperation and Development, on October 6, 2021. So, the Global Pact on Minimum Corporate Tax was an agreement between 136 countries, and the implementation date is from 2023 onwards. Now, what is the significance of this act, and what are the principles in the minimum corporate tax? Now, before going into the significance of this act, we have to understand the two basic principles, that is tax avoidance and tax havens. Now, what is this tax haven? The tax havens are those offshore countries that impose very low corporate tax or nil corporate tax on foreign enterprises or individuals in their country. That means those countries are having a politically and economically stable atmosphere. So, one important aspect in tax haven countries is they offer very low taxes, that is very low than 10% or even lower also, and political and economic stable environment, and their tax laws are is framed in such a manner that they do not share any information to those countries asking for details of a multinational corporations. So, the laws are imposed in such a way that tax avoidance is possible. That is the reason why the major multinational corporations like Google, Facebook and Apple, these companies are locating their headquarters in tax havens to avoid the taxation in their country of origin or where the customer base is located. This is one significant aspect. Now, what this pact is going to take, what are the measures that is going to be implemented with this imposition of minimum corporate tax? One important measure here is it will redistribute or it will reallocate the taxing rights on the MNCs. For example, the MNCs having the net worth or turnover of $125 billion annually will come under the purview of taxation, and also those countries having the market base or customer base, they can impose a minimum corporate tax of 15% on these companies. Till now, these MNCs are avoiding taxation in the countries of businesses or market access marketplaces. That means those companies are having headquarters in tax haven countries or low taxation regimes, but they are operating, they are conducting their businesses in those countries where there is large customer base is. But as the taxation policy is unfair, is discriminatory, they are taking advantage out of the loopholes in the taxation regime and not at all paying taxation to those countries where they are actually doing business. This is one significant aspect. And the second most important aspect is the imposition of minimum 15% tax. So, why this minimum 15% tax is levied? Because major multinational companies and also the digital services companies like Google, Facebook and Apple are locating their headquarters to those countries having low tax regime. That means their market access, market base and customer base and the actual businesses done are in developing countries or in their country of origin. For example, these Google and Facebook are having large customer base in India, but are they paying taxes to Indian government? No, because as per the taxation law or the corporate taxation regime, they are having their head offices in tax haven countries like Ireland. So, they are not paying revenue to Indian government. So, in this aspect our government is losing revenue. Not only Indian government but also USA also. USA and major European Union countries also, because most of the companies are having their origin or belongs to these countries. But since their head offices are located in tax haven countries, they are not at all paying taxes to the country of origin or the countries where the actual business, actual profit is done. This is one significant aspect. Now, what the provisions in this global minimum pact says? It says that those companies with annual turnover of $864 billion should pay the minimum tax of 15%. And also one significant provision is top up tax. If the companies or MNCs are not at all paying taxes or paying at a very low rate in the countries of where their head offices or headquarters are located, then the home country or the country of origin can impose a tax to bring the tax rate on par with 15%. That means it will lead to stabilization or it will bring the parity in international taxation regime, so that no company, no MNC should be left behind or should not go for evasion of tax, avoidance of taxation. Now here we have to understand the two concepts, that is tax avoidance and tax evasion. Tax avoidance means though MNCs or businesses, they try to avoid paying taxes by taking advantage of certain loopholes or sections in the taxation laws. That is tax avoidance. It is legal. And tax evasion is illegal. That means they are willfully avoiding, willfully violating the taxation provisions and not paying the tax. Here, in this context, the major companies or MNCs are avoiding the taxes by skillfully, by taking advantage of certain loopholes, they are avoiding the taxes. Now, to bring them into the purview of taxation, all the countries came together, 136 countries, and only 4 countries abstained from voting. These are Kenya, Nigeria, Pakistan and Sri Lanka. Now, the negotiations have been going on for the last 4 years to come to an understanding or to reach a consensus on imposing a global minimum corporate tax of 15%. The G7 finance ministers have also emphasized to build up a consensus on global minimum corporate tax of 15%. Now, what are the implications here? The implication here is the global minimum tax of 15% will generate additional revenue of $150 billion annually. For example, there is a corporate tax abuse of $10 billion annually to Indian government. That means Indian government loses $10 billion annually because of tax abuse, corporate tax abuse. Now this problem will be controlled, or this anomaly in taxation regime will be rectified with the new law, that is minimum tax of 15%. And one another significant aspect is it will prevent taxation disputes or trade disputes arising between countries, because under the garb of attracting foreign investments and providing employment in their domestic countries, they are imposing very low taxes, or they are attracting the MNCs to invest in their countries. So it will lead to trade disputes. Because of trade disputes, the free flow of trade will not occur, will not happen. For example, we have seen the trade wars between USA and China recently, and also European Union countries are also facing the problem of trade disputes. And this present act will bring stability, will promote multilateralism, or will bring uniformity in international taxation regime. This is one significant aspect of the global minimum corporate tax. Now, another significant aspect is it will prevent country shifting. So, what do you mean by this country shifting? It means the multinational companies or big tech giants are shifting their headquarters from their country of origin to those countries where the taxation is very low or nil tax. For example, tax havens like Ireland, Luxembourg, Estonia, Hungary. So, all these countries are not having high taxes, they offer very low taxes. So, the multinational companies are shifting their headquarters to these countries. So, in this way, in this aspect, the revenues, the annual revenue, the taxation revenue of developing countries are losing. They are not getting due advantage out of the businesses or profits done in their countries. For example, Indian government is losing revenue, maximum major share of the revenue because of this taxation anomaly in the present system. So, this anomalies in taxation will be rectified with this global pact. Now, another significant aspect is certain invisible services, intangible services are there. The intangible services like software, intellectual property rights, and on royalties. So, those companies dealing in these intangible services, they are not paying taxes to those countries where they are actually doing business, or where there is market base is or customer base is located. They are shifting their taxation revenue to those countries where their head office or headquarters is located. Now, the present regime will curb this practice. That means it will bring stability and uniformity in taxation regime. In this way, Indian government is also going to benefit, because it is having a large customer base and skilled manpower. Because of the skilled manpower and large customer base, the big tech giants like Google, Facebook, Apple are establishing their offices and even subsidiaries in these countries, but they are not paying taxes here. That is the reason why the government also, all the governments, major countries like 136 countries came to an understanding to impose this minimum tax. Now, some analysts have stated that it is very difficult to implement, because the implementation date is from 2023, and some smaller countries have opposed this type of taxation, as it will not lead to promotion of foreign investment in their countries. Now, and also some countries stated that it will affect the investment from special economic zones, because SCZs, special economic zones, offer tax incentives, they offer tax holidays. Now, With this minimum imposition of 15%, they are not going to attract investments from foreign companies, and this is one aspect. But when we see globally, when you see the long term interests of the world at large, it will reduce the trade disparity, it will reduce the trade disputes, it will bring a level playing field in international taxation regime, it will rectify the defects in the outdated taxation policies which is under practice now. This is one significant aspect. Okay, thank you.